Okay, and welcome back, students who are taking financial accounting, and we're working on the theory for Chapter 2, Analyzing and Recording Business Transactions. And in the last video, we had been talking about T accounts. And at the very end of the video, I had alluded to using the trial balance. So let me jump right to it here, okay? We had finished off on this slide where we're showing our general ledger. Okay? And of course, our ledger accounts will show up on either the balance sheet or the income statement. Assets, liabilities, and stockholders' equity are on the balance sheet. Revenues and expenses are on the income statement. Now, when you have your general ledger accounts, your GL accounts, okay, your GL accounts have let me just back up just one real quick here. Your general ledger accounts have beginning balances. Okay? Even if it's a new set of books, the balances are zero. Okay, but if not, they have a beginning balance, and during the course of the accounting period, you have transactions, and those transactions get posted to the GL accounts. Okay, theoretically, you only need to post transactions once. I mean, once an entry is posted, you don't want to post it a second time because obviously that's posting the same entry twice and you're overstating, okay? But theoretically, you can start out with your beginning balances in your general ledger accounts, and then throughout the entire accounting period, you could be making your journal entries and not post to the GL accounts, okay? And if you saw in the previous video, I showed the use of the T account in order to be able to determine what the balance in the ledger account would be. Okay, that's if you're not posting to the ledger accounts. Okay, it's 6 of one, half a dozen of the other. I mean, a lot of businesses will definitely post at least once a week, all right, if not more. Okay, but the bottom line is that when you get to the end of the accounting period, right, the end of the accounting period, um, you must post to your ledger accounts to take everything from the journal and put them into your ledger accounts. And when you do that, you're able to create balances in those accounts. Right? Now, again, during the month, you don't have to post. But if you want to know what the balance in an account is, you should use a T account in order to be able to figure out the balance in that specific account. But regardless, when you get to the end of the accounting period, all of your journal entries have to be posted into the ledger accounts. Okay? And when you do, you have all of these accounts, just like you're seeing here, and they all have the balances. Okay? And what you do is you create a general ledger trial balance. Okay? And the trial balance has its own particular formatting also. It has the name of the company. It has the kind of financial statement it is, which in this case here is a trial balance. Okay? And it has the date when the trial balance was created. Just like on the balance sheet, it can be called as of, the specific date, in this case here, January 31, or you can label it as just January 31, or you could have put it 01/31/2014. Any of these three are okay, are acceptable, okay? Just as long as you stay consistent with the way you do it, okay? Me personally, I like to write as of always, as of the specific date, and of course write out the date. And the reason why, because the words as of connotates that it's as of this specific date. If you don't have the as of in front of January 31st, I mean, those who know how to read financial statements know it's as of that date. But somebody who doesn't, they could be thinking, well, maybe it's just those transactions that were for that specific date, right? And not since the inception of the business, right? So the heading you put up, for formatting purposes, you create your heading, okay? And your heading should be center aligned, okay? It's in the center, right? Next, you have an account column, which lists all of your general ledger accounts in the order that you see them in the general ledger. Okay, so that means your assets would come first, liabilities second, equity would be third, revenues would be fourth, and expenses would be fifth. And notice what I just said. Assets would be first, liabilities would be second, equity would be third, revenues would be fourth, and expenses would be fifth. If you recall that when you number the ledger accounts, right, when you give the accounts a ledger number, that numbering scheme, all assets should start with a 1, regardless of how many, whether you're using 3, 4, 5, 6, 7 digits as an account number. All assets would begin with 1. All liabilities would begin with 2. All equity accounts would begin with 3. Of course, revenues would begin with 4, and expense accounts would begin with 5. All right. And when you're creating the trial balance, you are listing the accounts in the order that you see them in your general ledger. Now, some trial balances will have the account numbers here. Okay, we'll show the account number. So cash, let's just say, might be 101. Accounts receivable might be 110. Supplies would be 115. Equipment would be 120. Now, accounts payable is a liability, so that would be like 200. Notes payable would be 210. Okay, common stock is an equity account, so that would be like 300. Dividends would be 310. Service revenue is a revenue account, so that begins with a 4, so that would be 400. Rent expense would begin with a 5, so that'd be like 510, 520 for salary, 530 for utility expense. Some trial balances will list those account numbers like that. It's not necessarily wrong if you don't put them, but using a computer, it's beneficial to have them, because this way, if you're wondering what account number that is, you don't have to go looking at your chart of accounts to see what that account number is. They're already part of the trial balance. Okay. Then you have, as far as formatting is concerned, then you have 2 columns, a debit column and a credit column. Now remember, the lines on a paper don't matter. If you were using blank copy paper, okay, you would format your numbers into 2 separate columns, and you would label each one a debit and each one a credit. Now let's just say that you had, for whatever reason, you only had a 4-column paper, right? A 4-column ledger sheet. Here's column 1, 2, 3, and 4. Okay. You can use the 4-column paper. You're just not going to be using columns 3 and column. You're not going to use columns 3 and column 4. Okay. Even though they'd be there, you just don't use them, and you would only label debit and credit. So it's not a matter of the lines on the paper. Okay. What matters is that it's formatted correctly. Okay. Meaning you have 2 columns, a debit column and a credit column. Okay. You have an account column. Right. You list the balances in those accounts in their appropriate column, and notice that the first number in each column has a $sign. That's to designate that these are in dollar amounts, not digital amounts, not decimal amounts. Okay. Notice that you have a single underline. Okay. Why? Because it's going to be a mathematical calculation. When you add up all of these debits, okay, that's going to be your balance. And since it's the end of a calculation, it gets a double underline, and you write in the dollar amount. You write in the $sign to show that it's a dollar figure. Okay, and of course you do the same thing for the credit side. You have an underline, a double underline, and you're showing the $sign in front of the number. And if your books are balanced the way they're supposed to be, your debits equal your credits. And you write in total over here to designate what these figures are for. Okay, if you don't write the word total, you don't know what that's for. Okay, it could be total, for some reason you might have put in, let's assume you don't write in total, well, you can say this is my total expenses, even though it doesn't look like that. Okay, you could say this should be my total revenue, even though it doesn't look like that, or whatever. Okay, so write in total to designate that that's what you're doing. You're totaling up those particular columns. Okay. Earlier I had said you start out with a beginning balance, then you have your transactions, which you put into your journal, you post to your ledger accounts, and then you create a trial balance, okay, at the end of the accounting period. Okay. Now, here it's just being written as trial balance. I would have a tendency to write general ledger trial balance, okay, because a trial balance can be used also for accounts receivable, accounts payable, okay, and as you'll see when you're going through the closing process, we're going to have a pre-adjusted, an adjusted, and a post-closing trial balance also. Okay. A trial balance is created the same way, regardless of when you're using it. Let's say this, for the general ledger trial balance, I was doing this as of, say, January 15th. Okay, I ran it because I wanted to know what the balance of my cash account was, or I ran it because I wanted to know how much my salaries expense was. I can run a general ledger trial balance as of that specific date, and it's going to give me the balance in those accounts on that specific date. So that's why I call it a general ledger trial balance. At the end of the accounting period, you're going to have to go through a closing process, okay? And that's where we get into the pre-adjusted, adjusted, and post-closing trial balance, how they come into play, okay? I realize that you haven't seen it yet, and we're getting a little bit ahead of ourselves because I'm talking about what's in Chapter 3, and this is only Chapter 2. But I want you to be aware that you create the trial balance the same way, okay, but it can be used at different points in time. And depending upon what point in time you're looking at it, you have to name it appropriately, okay? Or, like in this case here, as they presented it on this page, I actually would have, instead of just writing trial balance, I would have written general ledger trial balance. And the reason why I would have written it as a general ledger trial balance is because I can also create accounts receivable and accounts payable trial balance. Now, and that's different from the general ledger. Now, granted, when you look at your receivables, you're going to see customer names, okay? And when you look at your accounts payable trial balance, you're going to see your vendor names. And of course, they don't look like your general ledger accounts, right? They don't look like these accounts because they're names, right? And theoretically, you should be able to just look at it. And I mean, you personally working in the business, you'll be easily able to distinguish between the accounts receivable, accounts payable, or the general ledger. But someone who is not as familiar with your business, if they were looking at an accounts receivable trial balance, they might not be so sure in their mind whether they're looking at a receivable or a payable. Okay, and that's why writing the name of the trial balance, whatever it is, if this was an accounts payable one, I'd write accounts payable trial balance, and I would write those words out. I'd write out accounts, ACCOUNTS. I wouldn't abbreviate it like this. Okay, or if I was looking at the accounts receivable, I would write out accounts receivable trial balance so that I know anybody who's looking at it would know exactly what it is. And therefore, since you're doing that, you might as well just get into the habit of writing general ledger, okay, as a trial balance, right? Unless, of course, you're working through the closing process, all right? But that's how you create a trial balance, okay? And again, it's really basically simple because you have your general ledger accounts and the balances in the accounts, and this is the way you format it. Okay, so when you're doing your graded project, pay attention to this because you're going to end up needing to format correctly, and you will lose points if your formatting isn't correctly. As a matter of fact, today I had a student call, and they wanted to know why their project was returned to them as not graded. They had ledger accounts and they had balances in the accounts, but their formatting was totally incorrect. And when it's totally incorrect, I can't tell what it is I'm looking at, and so therefore it was returned as not graded instead of being failed. Okay, so that's from the standpoint of education. If you're in the workplace, your consequences are much worse. You give the information, you present the information incorrectly, third parties are going to be making financial decisions based upon your financial statements. And if they come to wrong conclusions and you can show that your information was presented incorrectly, you open yourself up to legal liability, all right, in the company. So formatting is very important. Right? So with that said, this was a trial balance, and in the next video, I am going to start discussing financial statements and their relationships. Okay. Um, Again, if you didn't understand something in this video, go ahead and watch it again. And if you still don't understand something, feel free to telephone an instructor. Okay.